Hi there, Serial Trader here. We'll have a look at the major US markets heading into this coming week. And the bounce off the lows has continued since the last video. And I'm still kind of waiting for a signal here. So you can definitely make a case for you got three legs up here. Although on SPX, this is getting pretty extended to be a C wave. And it's starting to look more like a little third wave. And, just to show what I'm kind of thinking there, you could have a 1, 2, this could be a 3, maybe that was our 4, and we're starting a 5. So if we actually do make five non-overlapping waves off the bottom, if that actually happens, then we have to now switch to a bullish bias, look for a three-wave decline to higher low, and then go long. That'll be the trade to make if it goes this way. So potentially we have a hard low in place, although I'm still very skeptical of that. And actually, I'm still interested in potential short entry if the signal presents itself. Now, what would the signal be? Well, we need to just have a three-wave advance, not a five-wave advance, to stay confident that there's going to be another leg down. So if we do get above, what's the level here on SPX? 2938. So 2938.7. If we get above that, before we overlap with this high here, which was 2884.4. If we do that, then we got a clean 5 off the bottom. At that point, we have to now shift our focus to a long side trade setup. Look for a pullback if it presents itself and go long. But so far, that hasn't happened yet, and it looks like we started to fade towards the close there a little bit on Friday. So we can, hold these levels up here and break down, get below this level. That'd be a good early sign. So break 2900 essentially, and that'd be a good early sign that perhaps we have a nice leg down starting either a third or a C wave here. Now I like that we've done a more reasonable retracement of this overall decline. So right now we've got a bit of a pivot here in between the 50% and the 61.8% retrace. So a very normal retracement for either a second wave or a B wave. So no red flags there, although just looking at this substructure, if we have a little bit more strength here, get above Friday's highs without breaking these local lows down here, and then we're starting to look at 5 waves up, and that certainly changes things. But if and when, we haven't done that just yet. And I'll also point out, so this is SPX, but it helps to look at the futures sometimes. So on the ES futures here, now I haven't labeled the overall decline, but just off the bottom here, this counts so far nicely as a nice 5, 3, 5 up off the bottom. So an ABC up. AC equality, we went slightly past that, although not by a whole lot. AC equality was 29.31. We went as high as, let's see here, 29.40, 75. So it's not too bad. And we've just slightly poked past the 61.8% retrace here. And then we've started backing off of that. But again, so far, it looks like a nice ABC up. But, and this is something I need to point out. Let me just clean this up a bit. So far, we have a initial 5 waves up, 3-wave decline, another 5 waves up. Now, if this turns into a 3-wave decline, and we hold this level without overlapping our first wave over here, which we haven't done yet, even on the futures, there's no overlap, and we get another leg up here above this high, so that's 29.40.75, then we can look at this as a non-overlapping 5-wave advance off the lows, okay? And if we get this, then again we have to switch our focus to looking for a bullish trade setup and possibly going back to all-time highs once again. So stay open-minded, wait for it to kind of reveal itself. And any more near-term continued strength, and we have to start looking at this a little more bullishly, in my opinion. If we do get that non-overlapping 5 waves up, certainly not there yet. So really let the market decide. If we can get some weakness here, get some overlap, and maybe get a different signal, and I'll get to the other charts for that. Think about a short setup, but be very careful here. This is This has not been an easy market to short. There's certainly strategic points where it's worked out, but technically the overall uptrend is still intact. And by that, looking at this chart, we can certainly make the case we had that big one up, two down, and this is just another 1-2 of what will be, a more extended third wave. So, you can't put on your bear suit just yet. But we're watching. The short term will certainly give us an indication before, the daily or weekly charts will. Okay, so with that being said, we'll go over the Thinkorswim candlestick chart. And just looking at this with the moving averages and the candles. So on SPX, we got up to basically the 50-day simple moving average. We're having some resistance there. Did a bit of a doji day there on Friday. Again, we're just in between the 50% and the 61.8% retrace. So certainly a good area to pivot from and have another leg down, but we have to see some short-term weakness to embrace that as far as the trade goes. We did get oversold here on the oscillator, and then obviously had our oversold reaction. And so far, that's all I'm thinking of. This is an oversold reaction, although it could, as I mentioned, if we get that 5-wave short-term structure off the bottom, it could develop into a more substantial rally, and of course new highs thereafter, but to be determined. So on the daily candles, just kind of an indecisive day Friday, a doji day essentially. Not much there. We are still below the daily T line on a closing basis, so that's one check mark as far as the bearish setup goes. On the weekly chart, anything remarkable here? And yeah, a pretty bullish weekly candle last week actually. So that's a bullish hammer candlestick. So that could be a weekly pivot, in which case we're looking at new highs here. But again, let the short-term structure kind of tip its hand before we fully embrace this. But certainly weekly candle here, bullish, although we are still below the weekly T line. Looks like the weekly 3T line is about to cross below the T line. So a little bearish cross potentially about to happen there. Again, though, this week should be pivotal as far as picking a direction. Okay, so that's SPX. Now we'll go to the Dow Jones Industrial Average. And the Dow had a little bit weaker of a bounce off the bottom. So it's done about a 50% retracement. We're still below the daily T line. And again, kind of a doji day on Friday. So potentially a reversal day if we have some weakness here early in the week, and if we hold the highs there from Friday. And on the Dow, that's 26,413. Now, as far as the weekly candle on the Dow, what do we got here? Weekly candle, we do have a bullish hammer candlestick, basically right off that 50-week simple moving average. So doesn't look too bad here on the weekly, although again, we are below the weekly T line. 3 T lines crossing below the T line, so we'll have to lean on the shorter term charts before this weekly really tips its hand here. Okay, so that's the Dow. NASDAQ composite, how are we looking there? So NASDAQ composite, what did we do for a retracement? Let's just check that out. Okay. All right, so we did similar to SPX, in between a 50% and a 61.8% retrace. So this is a very similar look to SPX. We are below the daily T line here. We closed below it on Friday. And yeah, basically, if we can, so in the case of the NASDAQ, if we can stay below Thursday's high, so that was 8,041.12, we basically got a 3-wave move up off the bottom in between the 50 and the 618, still below the T line. So I'm still liking the potential here to fade this, but we just need a little bit of confirmation. And if we don't get it and we actually do that leg up, make a 5-wave structure off the bottom, then we'll be waiting for a little short-term pullback and then get long potentially for a big move up. But really indecisive here at this point as far as picking a direction. It's kind of a coin toss here until we get some more price data to go off of. So that's the daily NASDAQ. Now, weekly, I'm assuming it's going to look the same. No, a little bit different. So the real body is a little larger there than SPX or the Dow, but basically the same idea. I wouldn't quite call this a hammer, but it's almost there. The longer lower shadow. Real body's a little too large, but basically a potential bullish reversal candlestick. But again, below the weekly T line here, so not going to know much on this weekly chart until we get some shorter term confirmations. Okay, so that's the NASDAQ. So really all three indices set up very similarly here. Now on the VIX, well, there's something interesting to point out on the VIX. So back in May and June, when we had some bearish action, we had this initial spike up on VIX. I believe it was in that first leg down in May, and that got us to 23.38 on VIX. And then we had a lower high on VIX, which coincided with a lower low on SPX and the indices. And that lower high on VIX was 1975. Okay, so I did mention before, if we got a VIX move above those two levels, that would be notable, because we actually made a higher low on VIX compared to this low over here. So now we have a high, a higher low, and now a higher high on VIX. So VIX has technically started an uptrend here, which isn't, that's not a bullish development for the market overall. So that has my attention. And, we had this nice spike up on VIX to 24.81. Looks like we're going to set a higher low on VIX here compared to where we started from. And we're basically sitting around the T line on VIX. So I'm watching this carefully. This has my attention and also makes me lean a little bit more towards looking for a bearish trade setup. Although, again, I need to see something, a little confirmation before I'll pull the trigger in any significant way here. So VIX technically in an uptrend now, and also broke the spike highs of the previous correction we had in May and into early June, so that's notable. Okay, now VIX VVIX tool. What do we got here? So the VIX VVIX tool had a nice sell signal earlier to kick this off. We got above the red moving average on VVIX after having that divergence between VIX and VVIX, and then we got below the blue moving average on SPX, and that obviously gave us a nice sell-off, a couple hundred points or so, right? Now we're off that sell signal at the moment because we've gone back below the red moving average. We've gone back above the blue moving average here on SPX, but awaiting a potential sell signal to emerge again. So what do we need to see? We need to see VVIX here get back above this red moving average. We need to see SPX get back below the blue, which is currently around 28.85. So this is not on a sell signal currently, which also is kind of reflecting the indecisiveness of where we're at here. Just waiting for a signal at this point. All right. So that's kind of what I'm looking for this coming week. Certainly interested in potentially buying some puts or selling some futures, but I just need to see a little more before I'll really pull that trigger in a major way. Now let's see here. So yeah, just key levels to watch. Essentially here, probably as early as Monday, we might violate these levels and get some new information. So if we can hold, I would say just coming in here on Monday, if we can hold the low of 2900.2, so let's just call it 2900 essentially. If we can hold that low and get above 2938, that'll give us a 5-wave move off the bottom. At that point, it's not necessarily a buy right there, because at that point you'd have a completed 5. You'd wait for that 3-wave correction after your 5 up, and then that'll be a pretty high confidence long entry. But if we can stay below 29.38 and we can get down low enough to at least get some overlap here with 28.84, that'll give this a more 3-wave look to it. And then at that point, to the downside, you'd look for a little, corrective wave up as a potential entry point. But let the market decide. No bias here. And could get a signal as early as Monday, but certainly I'm thinking in the first 2-3 days of the week this should tip its hand here. But we'll see. All right. Serial Trader signing off.